Throughout our history, AECOM has been committed to delivering a better world. As the community grapples with the challenge of coronavirus, our forthcoming Future of Infrastructure report is a call to action. The time to start rebuilding is now. By creating jobs and economic activity, investment in infrastructure can help lessen immediate hardships and create opportunities for a stronger tomorrow. Thriving societies, a healthy planet, a culture where innovation thrives, resilient communities that are sustainable, funded according to need. That future is possible. That future starts now.
Assalamualaikum. Very good morning to everyone. I'm Zainal Amansyah, AECOM's country representative for Malaysia. Thank you for joining our The Future of Infrastructure Southeast Asia webinar series. Today, it is Malaysia's turn to host. I understand that participants have joined from Malaysia and the Asia region this morning. So selamat datang and welcome. Our topic today is the role of infrastructure in economic recovery, and we have gathered an esteemed panel of speakers that I will introduce later. First, let me hand over to my colleague, Mr. Scott Dunn, who will share more about AECOM's The Future of Infrastructure program. Over to you, Scott.
Welcome. My name is Scott Dunn, Vice President at AECOM, and I'd like to give you a bit of background on AECOM's Future of Infrastructure program. Now, around the world, a key government priority is always on infrastructure and catalyzing greater investment in developing them. This is unsurprising given that infrastructure can be an enormous economic multiplier, providing dividends for an economy and its people long after the initial project is finished. However, the world is facing a growing infrastructure investment gap, and APEC accounts for the majority of this, showing both the potential of this fast-growing region, but also the lack of the ability to fund and deliver. There are many possible reasons for this, from bureaucracy to underskilled labor force, from shortfalls in national funds to low level of technological innovation in construction. Now, across the different sectors in APEC, all of them essential utilities for growth, the gaps are even clearer. And as you can see among them, transportation-related services have the largest shortfall. But as governments, commercial corporations, and people work together to realize these infrastructure development progressively, our cities continue to evolve with emerging stresses on the systems. The time is now to consider new paradigms and scenarios in our future infrastructure planning. Now imagine future transportation possibilities. What are some of these new transporters? Can we have electric driverless cars, hyperloops, spaceports, interconnected underground tunnel networks? How about the electrified vehicles ready for daily commuting? Is this attainable in the next 5 years? What about the impact of autonomous transportation to our cities, both on the roads as well as in the air? Moving to digital, which will continue to be the center of all things in the future, what should we be considering in terms of infrastructure security, reliability, and sustainability? And let's not forget about the importance of green and blue infrastructure in our cities. What are the elements to consider as we master plan new districts, public spaces, and habitats above and underground? Now, this is why AECOM initiated the Future of Infrastructure program, to engage the market, to discuss these possibilities. Global infrastructure needs are daunting, particularly when contextualized against the issues like strained government budgets and climate change. We believe together with you, our conversations can provide some important solutions and help create a more connected and sustainable world. Our Future of Infrastructure report was first launched at the World Economic Forum in 2018. Now, on this important global stage, we showcased how infrastructure is complicated by rapid urbanization, demographic changes, and digital developments. We highlighted the new needs to manage resilience and evolving workforce requirements, as well as new approaches in bridging funding gaps. We helped inform leaders how their citizens experience infrastructure services and identified areas of improvement. Last year, we brought this conversation to Southeast Asia. In a series of forums and conversations in Southeast Asian cities, we engaged key audience and leaders and learned deeper the level of sentiment within the region. Now this year, we launched our third edition of the report, which comes at a pivotal moment. Countries and cities are struggling with the coronavirus pandemic. Attention is now focused on immediate priorities of the health crisis and related economic crash, but we should be wary of letting other considerations slide. In this year's report, our thought leadership articles cover key themes of enabling resilience, social value, climate change and sustainability, and making the case for infrastructure in a post-pandemic era. History tells us that investing in infrastructure has an important role in helping economies get back on their feet. In the short term, it provides much needed jobs, while strengthening the backbone of the economy for the long term. With the right choices, infrastructure can help society emerge stronger from the crisis. At AECOM, we feel we have a duty to play a part in this. Thank you, and I look forward to the dialogue today.
Dr. Zainal, I think you're still on mute.
Sorry, I'll start again. Globally, many nations have felt the sharp impact of the COVID-19 pandemic. The Malaysian economy, which is the third largest in Southeast Asia, has been hit hard primarily due to the movement control order. This has severely affected important sectors such as tourism, aviation, hospitality, manufacturing, and investment. At stake is national stability, plus businesses and personal livelihoods. Today, we will discuss how Malaysia can better position itself for economic recovery and resilience, specifically through the area of infrastructure development. This is due to its known multiplier effect of boosting and stimulating economies for growth. A study for Business Roundtable, an association of CEOs of leading companies in the US, found that with every $1 of infrastructure investment returns roughly $3.7 in additional economic growth over 20 years. In Malaysia, the recently revived cross-border rapid transit system, LINK or RTS, between Singapore and Johor Bahru, the ECRL, East Coast Rail Link, and positive progress on the iconic Bandar Malaysia hub was indeed good news. We are eagerly awaiting the Malaysia Budget 2021 on November 6. Regarding potential high-impact projects such as KV MRT Line 3, the KL Singapore High-Speed Rail, and others. These high-impact projects can potentially enhance our public transport network to main commercial transit-oriented development centers of business and activity, reduce congestion, and enhance trade and collaboration. More importantly, they can create job opportunities in the engineering, transport, and construction sectors, attract renewed investor interest, as well as flow of private capital into the economy. But there are also other significant infrastructure projects and initiatives in Malaysia, such as those in our northern and southern corridors. So the question is, can these high-impact projects and economic corridors help our economy rise above the impact of the global pandemic? How can we fund them with innovative models? How can we better manage risks and build resilient infrastructure that are future ready? So I'm therefore honored to welcome our panelists to discuss these questions. From our two economic corridors, Datuk Seri Jabersingam Isaac John, Chief Executive of the Northern Corridor Implementation Authority. Welcome, Datuk Seri. Datuk Ismail Ibrahim, Chief Executive ISKANDAR Regional Development Authority. Welcome, Datuk. Mr. Christopher Loh, Managing Director, Macquarie Group in Singapore. Thank you for joining us, Chris. And my colleague, Mr. Scott Dunn, Vice President, Southeast Asia AECOM, who you saw earlier in the video. Thanks for joining us again, Scott.
Morning.
We'll start with a short presentation by each panelist, followed by a Q&A. So first up, let me invite Datuk Seri Isaac, the Chief Executive of the Northern Corridor Implementation Authority. Datuk Seri Isaac has 40 years of experience, having served at both federal and several state levels in Malaysia. He has been involved in key high-level projects, including the planning and development of Putrajaya, the Klang Valley Development Plan, as well as the Langkawi, Penang, and Kulim high-tech parks. So over to you, Datuk Seri Isaac, for your presentation.
Thank you, Datuk Zainal, and good morning to every one of you. First of all, I'd like to congratulate AECOM for organizing this webinar, The Future of Infrastructure, the Southeast Asia series. Congratulations. As Datuk Zainal mentioned, let's look at the global economic outlook. Most of the major economies, with the exception of China, contracted in the second quarter of 2020. The US GDP contracted by 9.5 in Q2 2020. The EU's GDP contracted -15 and UK's GDP contracted 21.7. Other regional economies in Southeast Asia, such as Singapore, Indonesia, Philippines, also contracted in Q2. Malaysia is no different. When we look at the last quarter, because of the movement restriction imposed in Q2, our GDP contracted -17. And we hope to hit about 5.5 by end of this year, provided all our strategies are in operation. Now, for the Northern Corridor itself as an economic region, we are looking at a negative 4 to 5%. So, within this framework, we like to understand how governments can play a role in boosting the economy. I think one of the main things is governments need to look at an expansionary fiscal policy. An expansionary fiscal policy will stimulate consumptions and investment and directly increase government spending that would actually increase aggregate demand. An expansionary fiscal policy is achieved via direct government spending, stimulating private investments, and also increasing public investments. So one of the priorities for the government is to increase expenditure on shovel-ready infrastructure projects, which have high multiplier effects. And I think this is something we really need to keep in mind in this post-economic recovery, that infrastructure has got a key role to play, and it has got significant multiplier effects. Now, as we move on to the region itself, when we look at the Northern Corridor Economic Region, we are looking at a socio-economic recovery program that looks at safeguarding income and livelihood, generating jobs and employment, encouraging entrepreneurship, and of course, spurring the local economy. But our prime economic clusters are actually manufacturing, services, agribusiness, and there's also a focus on digital economy and also green economy, sustainable mining, and to a lesser extent, petrochemical. But one of the key enablers in this socio-economic recovery is actually infrastructure. So infrastructure is actually a key focus in terms of our long-term vision in developing our region. Now, as we move on, Jeff, the next slide, please. Strategic infrastructure and logistic projects to boost private investments and employment. I think this is very critical. When we talk about strategic infrastructure for the northern region, of course, we are looking at the North-South Expressway, the Penang International Airport, the Penang Port, the Langkawi Airport, the electrified double tracking, the West Coast Expressway, and other new projects in the pipeline include the Northern Corridor Highway that links right from Padang Besar in Perlis right through to Changkat Jaring in Perak, connecting to the West Coast Highway. And then we have the Kedah Aerotropolis. The Kedah Aerotropolis is the new international airport in Kulim, next to the Kulim Technology Park, and also the SLAM Logistics and Industrial Aerospace Hub. And also, we are also looking at the upgrading of the Penang Airport, in addition to upgrading the Ipoh airports. And key logistic projects are also critical in this context. Logistics will actually help to support the infrastructure development. And here you can see some of the examples of our logistics programs: the Padang Besar Inland and Container Depot, the Ipoh Cargo Terminal, the Penang Central, the Bukit Kayu Hitam ICQs, and also the other projects in the pipeline include the Perlis Inland Port and also the Kota Perdana Inland Container Depot development. Now, this has got to be supported with strategic projects. Some of the current strategic projects that we are looking at are the Chuping Valley Industrial Park in Perlis, the Kedah Rubber City, and the Silver Valley Technology Park in Ipoh, the Northern Corridor Technology Innovation Center in Penang, the Sidam Logistics, Aerospace and Manufacturing Hub in Kedah, and also the Kedah Eco Innovations Park in Kedah. So here you can see there are a lot of key projects that we have got in the pipeline for the Northern Corridor Economic Region, primarily to develop and generate economic activities. So here you can see a spatial distribution of all these projects and programs that I've mentioned. But what is key in this integrated infrastructure development framework is digital infrastructure and the digital economy. The National Fiberization and Connectivity Plan is critical in this respect. We need to capitalize on the digital infrastructure. Digital infrastructure, to my mind, is the key to developing our countries, particularly in the context of the post-pandemic recovery. And now, infrastructure and digital economy alone is not sufficient. This has got to be supported with fiscal and non-fiscal incentives by the government. This includes broad-based incentives for priority sectors, incentives for specific projects, talent development programs, and also the corresponding human capital development programs, so that the talent is also developed as we work on the overall development strategic framework. Now, this actually briefly sums up the basic projects and programs that we are looking at in the Northern Corridor Economic Region. And we see the Northern Corridor Economic Region as a prime location for business and growth. There are potential opportunities, numerous opportunities available for partnerships, for collaborations and investments. These include investments in our thematic industrial parks, participation in the construction activities, participation in public-private partnership projects, and also in the industrial park development. Of course, the value proposition, we are future-ready, strategically located. There's a mature business and ecosystem, dynamic and comprehensive, attractive and competitive fiscal and non-fiscal incentives, industry-ready talent, and there's also end-to-end facilitation. And we collaborate with MIDA, MITI, the Ministry of Finance, and the Economic Planning Unit. So there are a lot of opportunities in the Northern Corridor Economic Region. So you're welcome to get in touch with us. So Datuk Zainal, maybe that will be my brief introduction to the projects and programs and the opportunities in the Northern Corridor Economic Region. Thank you.
Thank you very much, Datuk Seri Issace. Very interesting, and I'm sure we'll have a lot of things to talk about later on. Next up is Datuk Ismail Ibrahim. He is a chartered town planner and was appointed Chief Executive of ISKANDAR Regional Development Authority in 2010. He has more than 30 years of professional experience working in the public and private sectors, mainly in the field of urban and regional planning, development and governance. Over to you, Datuk Ismail.
Thank you, Datuk Zainal. Good morning, everyone. I would like to share with you the experience of ISKANDAR Malaysia as an economic region as we plan for development, and how this whole concept of ISKANDAR Malaysia jives in well with Malaysia in its effort towards nation building. I think for the benefit of those who might not be familiar about economic regions in Malaysia, the whole idea actually can be traced back even in the early 70s. The idea then was to balance economic growth between rural areas and urban areas. Hence the establishment of several regional authorities. Even to this very day, those authorities are still in existence to ensure that as Malaysia grows, there is always a balance between rural and economic growth. Fast forward in the late 2000, around about 2006, 2007, the government, in its effort towards ensuring that the wealth of the country would be spread evenly across the four corners of the nation, hence the introduction of the economic regions firstly with the introduction of ISKANDAR Malaysia, followed by 4 other economic development corridors, namely the Northern Corridor, Eastern Corridor, and corridors for Sabah as well as Sarawak. Now, when we look at economic corridors, of course, apart from, to a certain extent, supports the vision of national growth, we are looking very, very closely in relation to how can we position each of the economic region not only in support of the nation's growth, but to ensure that this region will be positioned in such a way that it is attractive for investment to come in, built by jobs as well as business to thrive. Hence, there is always this argument that location is very important, but equally connectivity is also very important. When we talk about connectivity, definitely infrastructure comes into the picture. Infrastructure, as mentioned by Datuk Issace, both in hard as well as soft infrastructure. That has happened in ISKANDAR Malaysia in its early days of development, where we put a lot of emphasis on the development of infrastructure to improve connectivity, to ensure that as we improve connectivity, definitely the region becomes attractive for investment to come in, both domestic as well as foreign investment, hence bringing about the much needed wealth so that wealth can be distributed fairly and equitably. And along the way, definitely we'll be able to create jobs, and we will allow business, especially local business, to thrive and to grow. So coming back to ISKANDAR Malaysia, definitely connectivity has played a very important role. As you can see, the government through public funding has actually put in quite a lot of funds in the development of infrastructure, both in software as well as in the hard infrastructure. Very briefly, the development of ISKANDAR Malaysia is guided by its comprehensive development plan, where we talk about the three pillars of economy, social inclusiveness, as well as the environment. And at the same time, we also give emphasis on wealth creation. And secondly, by creating that wealth, we'll be able to spread that wealth fairly and equitably. And thirdly, we have to deal with the limited resources of limited resources. Therefore, we need to optimize those resources to ensure that it is always value for money when we utilize those resources. Now, can I move on to the next slide, please? Now, this is our way of dealing with ISKANDAR Malaysia. As you can immediately see from the illustration, it goes to show that when we talk about wealth generation, it must go hand in hand with how we deal with those wealth in terms of translating it into household income, jobs, as well as other measures of growth, and at the same time optimizing those resources. So far, we have been able to say that we have achieved a huge milestone of wealth generation by way of recorded investment. Thus far, up till June 2020, from the time of our inception way back in 2006, we've been able to record an investment of around 332 billion ringgit. And that is a huge investment. And we have actually contributed about 6.5% of GDP growth. And definitely along the way, by the guidance of our comprehensive development plan, we've been able to create the much needed jobs as well as business to grow. Now, along the same line, we also have been monitoring and have been contributing towards ensuring the average household income continue to improve from what it was on average back in 2012, around about 4,500 ringgit per household. It has improved more than double to around 9,177 ringgit last year. So it goes to show that with the improvement of the connectivity by infrastructure, we've been able to position ISKANDAR Malaysia as an attractive region for investment and for people to come seeking for jobs as well as business to grow. But on the same token, again, we are also dealing with environment, because in our view, climate change is very important. We have to demonstrate that whilst we continue to grow, whilst we continue to open up land for companies and for manufacturing to take up those lands, we must also ensure that we are keeping close watch on how we deal with the environment. And therefore, one of the initiatives that we put across through the low carbon initiative and the smart city initiative, which we have already put in place here in this region. Now, I would like to move on the next slide by demonstrating to our audience today on several of the key projects that have been put to place, most of which have been completed. Definitely, there are some that are either still in the discussion as well as the ongoing ones. As you can see from the illustration, it goes to show that our infrastructure projects deals with both hard and soft infrastructure, and our infrastructure projects, again, echoing from what Datuk Issace mentioned just now, are those projects that are catalytic in nature, those projects that would ensure that you bring about the much needed high multiplier effect, as well as the clustering of business around those nodes. And so far, public funding that has been recorded in ISKANDAR Malaysia is in the region of about 17 billion ringgit. As I've mentioned earlier, based on the recorded investment of about 332 billion ringgit, it goes to show that it is on a ratio of about 1:19. So in other words, for every ringgit that the government puts in through public fund on infrastructure, the private sector have actually come in 20 times more or 19 times more. It goes to show that this is an example of how true economy is taking place, and we will continue to make sure that through infrastructure development, Iskandar will continue to be attractive for business to grow and for the economy to continue to grow. Moving on, the next slide, which is I think on my last slide, we are also in the process of developing not only through the highways and the rails and all that, as mentioned earlier by Datuk Zainal. We are also involved in some of the other soft side of things. As I mentioned earlier, we deal a lot with the development of smart city, where we involve all the local authorities as well as state government in our effort towards the achievement of smart city, in line with the United Nations SDG programs. We are also ensuring that part of our connectivity is in the build up to ensure that we are strong in our database through our Iskandar Malaysia Urban Observatory, so that decision makers are able to use this database to make analytics as well as decision making, either by real time or by way of planning and implementation of policies. So far, we are able to say that definitely infrastructure development is very important to ensure that Iskandar Malaysia or any cities or any region for that matter to be competitive, not only from an economic standpoint globally, but also to ensure that the society and the community at large would benefit from the build up of this infrastructure. So I will end my presentation by concluding that investment through infrastructure is very important, because they ensure sustainability and resilience and the advancement of society. And at the same time, we need to have continued support from both the public and private sector to ensure that whilst investment through infrastructure comes in, this investment must be sustainable in nature. I will stop that at that. Thank you.
Thank you, Dato' Ismail. Very interesting presentation, and I'm sure we'll have lots of questions for you later as well. So moving on, I'd like to invite Christopher Lowe. He is the Managing Director with Macquarie Infrastructure and Real Assets, otherwise known as MIRA. MIRA is part of Macquarie Asset Management, the asset management arm of Macquarie Group. MIRA manages 132 billion in assets, USD, 132 billion USD in assets, including over 150 portfolio businesses. So Chris, over to you with your presentation.
Thank you, Dato' Zainal, and good morning, everyone. And I think, firstly, thank you for AECOM for inviting me to this webinar. Very honored to be a part of the esteemed panel. So if I may, just a couple of slides on Macquarie Group. On next slide, please. As Dato' Zainal has mentioned, Macquarie has been a long-time investor in the infrastructure space. We manage over 130 assets today. We're the largest infrastructure manager globally, and we help investors deploy capital in this space. We're also a very large financial advisor in this space and have been doing so for the last couple of decades. Next slide, please. Just in terms of the infrastructure investment opportunity on a global basis, and I think some of these numbers tie back to the numbers that Scott was using earlier in terms of the infrastructure investment required globally. That's, we think, is approximately $80 trillion by 2020. And the reason for that is just the sheer amount of people who are urbanizing, moving towards city centers looking for jobs, and the fact that to get to those jobs you need high quality transportation, and also more increasingly so just the upgrading of digital infrastructure as well, as the economy becomes more developed and advanced. And next slide, please. So what I thought I would do to offer a little bit of different perspective to this webinar is to just talk about, the amount of capital that is out there that is looking to be invested in infrastructure globally. And I've pulled a couple of these slides from Preqin, which is a source that we use to track kind of investor appetite. So how much capital is out there currently invested in this asset class? We think there's approximately $600 billion that has already been allocated, of which 220 needs to be deployed still. And out of that, circa 74 billion of that is targeted towards Asia and Asia Pacific. Why do investors like this asset class? I guess in this period of financial uncertainty where there's quite a lot going on in the stock and bonds markets, infrastructure as an asset class has increasingly been well accepted by long-term investors because of the benefits of diversification, but also because you're actually investing in a real asset class backed by real assets that have long-dated cash flows, links to inflation and links to GDP, which offer investors like pension funds a good way to hedge against their long-term liabilities. So there's increasingly more and more capital that's coming to the space as investors seek more diversification. Next slide, please. So what are the types of investors who are investing in this space? So we've, over the last decade or so, have seen a huge amount of interest from pension funds and sovereign wealth funds to invest in this space to basically hedge those long-dated liabilities that I spoke about. Initially, this started out from Australia, where we had the Australian super funds who invested in this asset class. And increasingly, we've seen investors around the world, from the Canadians, the Americans, the Middle Eastern investors, who have also started to allocate more and more of their capital towards this asset class. Even the EPF in Malaysia is also a big investor in infrastructure, not just domestically in Malaysia, but also globally in developed markets as well. So what are the sectors that infrastructure investors typically target? If you look at the chart on the left-hand side, you can see that renewable energy obviously has been very topical as economies move to decarbonize. Transportation is another big sector where investors like long-dated assets that offer inflation-like protection, like toll roads, for example, is another asset class which people have investors have invested quite a lot of capital on. And then lastly, probably the third bucket will be utilities, where either electricity transmission grids or water utilities have also seen significant investment by investors over the last decade or so. So just moving on to the next slide. So one of the questions that was posed to me as part of this webinar was, how do we catalyze more investment into infrastructure, the infrastructure space, and what are the key hurdles that investors need to kind of get over? The chart on the left-hand side was something I pulled off from a McKinsey report in terms of what are the three levers to establish infrastructure and invest as an investable asset class. And the area which I'll focus most on is around governance and capability, because that's where I think financial investors like ourselves and our clients struggle the most. And if you look at the right-hand side, what are investors' views on terms of what are the key challenges for infrastructure investment and generating returns? One of the things that investors keep coming back to as the reason why as the key impediment for them to invest in infrastructure is that they don't have the capability to manage the risks associated with investing in the asset class. And what are the risks specifically? So, on this chart, they talk about political landscape and regulatory risk as being one of a couple of the key risks involved. And that has to do with, the political uncertainty or the regulatory uncertainty in some of the more developing markets that we invest in. And that has to do around, the shifting or changing landscape as you invest in the asset class. To give an example, over the last, 5 to 6 years, for example, we've seen in the global economy, not just in developing nations where, more populist governments have been voted into power, and then therefore, the support or subsidy that was previously offered to renewable energy, for example, has been slowly pulled back in some countries. It's also been popular, for example, for the governments to defer or delay tariff indexation on utilities such as roads or water concessions, for example, which make it a little bit tricky for, I guess, long-term investors to invest in the space, especially when you take into account the fact that as financial investors, they're just not capable of dealing with that risk or understanding that risk fully. So that's one of the key impediments, and that's where people like ourselves, fund managers or GPs, as we call ourselves, try to allocate the capital to, I think, the best risk-reward opportunities that are out there. I have a couple of slides after this to just highlight some of the opportunities that we have helped investors with over the last couple of years. So the first one is in developing a wind farm in Sweden, where we advised the group on how to put together the financing for it. This is an example where there is pension fund money that wants to get deployed in renewable energy. They totally understand the decarbonizing thematic. Wind farms offer very low operating risk, but it's the structuring of how do you get in at financial goals? How do we partner with the right people, with the right governance framework, so that it becomes investable to financial investors? If you look at the next example, the next slide, we and this is an investment made by the fund that I work for 5-6 years ago. The fund, Macquarie Asia Infrastructure Fund, invested in a water treatment facility in Shenyang, where this was a partnership with the local government in terms of a PPP project, where now we supply clean drinking water to over 500,000 residents in Shenyang. And that gives our investors the exposure to long-dated cash flows and a quality asset where the regulatory framework has been quite supportive. Another example, and these are my last two examples, is that we also advise on the government's privatization of Sendai Airport, for example. And the next slide, last one, is that another Macquarie-led infrastructure fund also invested in the replacement of the bridge between New York and New Jersey called Goethals Bridge a few years ago. And that, to my other panelists' points, is a great example of how the government and the private sector came together to put investments, which has kind of catalyzed the local economy. So I'll just pause there and hand it back over to you, Datuk.
Thank you very much, Chris. Very interesting examples there. And again, I'm sure we'll have a lot to talk about. Well, we've heard from our two heads of corridors on a massive infrastructure that has already been invested in their plans. We've heard about the funding, the criteria, and some examples. But what about future-proofing our infrastructure, and what about the associated risks? So with that, I'd like to call upon my colleague, Scott Dunn, Vice President of Southeast Asia. Scott Dunn is an urban planner and city integrator who leads cross-functional interdisciplinary teams in providing integrated services and sustainable solutions for large, complex and multidisciplinary projects across Asia. Over to you, Scott.
Thanks, Zainal. And it's actually very interesting in terms of hearing the presentations, and I'll pick up on part of that. I'm going to be relatively quick so that we can get into a discussion and dialogue. And I thought I'd pick up on some of the points that we had made in the Future of Infrastructure publication around moving cities and some of the things that we're seeing in terms of trending. And I think picking up on Chris's points related to some of the risk that we're seeing, this is what a lot of our client base is actually looking at in terms of how to future-proof for the longer term perspective. And I'm going to focus around kind of two main areas that we're seeing as definitely a strong emerging trends. One is around climate resilience and urban resilience, and the other is around the 20-minute city in terms of being able to create places that attract talent and create better livable outcomes. Next slide. So I pick up on a couple areas in terms of climate resilience. I mean, what we're seeing is an immediate shock to the system, but there still is this long-term wave that's coming in. And that is in terms of physical threat to our environments. And with that, cities that are planning in terms of the forefront of this are going to be much more better positioned in terms of attracting both talent to the cities, but also investors in terms of the investment community coming in that are setting up the framework to be able to identify what those threats are and provide a transition to those risks. Next slide. And I'll use the work that we're doing in New York. And Chris mentioned one project that's in New York, but there's actually many different programs that are going on at a national level, at a state level, and a local level. And AECOM's working on several of these in terms of how you tie infrastructure into this long-term climate resilience strategy to protect trillions of dollars of real estate that exists within the New York Harbor area. Part of this is road infrastructure, where we're looking at road infrastructure and creating alternatives for providing interim flooding mitigation to protect and defend some parts of the city. Other is using the green and open space as sponges to actually absorb some of this in terms of long-term protection. And some of it is tied into then the urban waterfront and how you provide long-term protection and some of the larger barriers that may be needed to defend against sea level rise in the long term. So this is all things that the government is doing in terms of being able to protect and defend. And that is being done in a way that, next slide, is actually looking at pathways so that the investment into the infrastructure, into a single infrastructure, and it was mentioned earlier in terms of shovel-ready infrastructure, is that we can then start to look at where we need to create strategic infrastructure now, but be able to plan for that infrastructure to change over time, to be able to protect areas to accommodate or potentially even retreat in some areas, so that the investment dollars up front may be a small portion, but depending on what happens in terms of climate resilience, there is the ability to change over time. And what we're seeing, next slide, especially in the New York area, is by deploying this, it's changing the urban landscape across the whole city harbor. And this deals with 2 state jurisdictions, it's multiple local municipalities, and then there's a federal layer in terms of the funding into this. And the ability to actually coordinate this with private sector will eventually build a resilient plan over time to defend and create a thriving living community in New York. Next. And we're seeing this also in terms of Singapore has recently deployed a similar program where they're investing 100 billion into a similar strategy looking at all of Singapore for a long-term adaptive pathway. And this is something that is, again, about creating long-term resilience for Singapore moving forward. Next. The other area around climate change is really on the low carbon outcomes. And Dato' Ismail actually mentioned this in Johor's strategic plan, which I think is fantastic. And I think this is an area that we're seeing a lot more of our clients asking for how to decarbonize. So there's decarbonization with the buildings themselves, but there's also then looking beyond the building. Next slide. And we're doing a lot of work, for example, in Australia, where we actually look at the long-term strategies around the energy grid as one example, where that energy is coming from. So as a city or a government, if you're able to provide low carbon solutions within your grid and your network and options for that, that may be more attractive to institutional capital that is looking to decarbonize their overall portfolio and assets. So they can deal with their building themselves. But if you, as the plug and play provider of all of the infrastructure, can also provide low carbon infrastructure, then you're going to be able to attract more of this global institutional capital. Next. And then the other area that I wanted to talk a little bit about was the 20-minute city. And I think this is around attractiveness in terms of changing patterns of which we live and work. We're doing quite a bit of work in London right now with the Transport of London on the road right away. And this is one area where we're seeing a greater adoption of different ways of getting around your city, making it more convenient to walk or cycle to shops, and more convenient to actually get to the things that you need in a shorter period of time. And we see this starting to now look at the actual land uses around different communities and being able to create more multiple uses and better flexibility in terms of those conveniences within your own neighborhoods. Next slide. And the other big area is around the green and blue open space. And I think this is something we've been doing quite a bit of work in the Greater Bay Area. The Dashaw River was recently opened up, and this provided an incredible amenity for adding value to the residential and the working environments in this neighborhood in terms of how you get around Shenzhen. And this is something that has been started, and there's quite a few small projects, I'd say, in Malaysia. Next slide. River of Life was one of those projects on the Economic Transformation Program. I think this is something that shows incredible value, and that's something that could be further expanded across Malaysia in terms of how to deal with some of the open spaces and water to create better livable outcomes. With that, Zainal, I'll turn it back so that we can start to have a discussion around some of these points.
Thank you very much, Scott, for your interesting presentation. So ladies and gentlemen, we've come to the Q&A session. We've got about 25 minutes for Q&A. So I see a lot of questions already being posted up. So please keep the questions flowing. I also in parallel want to run a poll, but before that, let me kick off with this question, and then we'll get onto a poll and then the Q&A. We all agree from the various presentations that infrastructure investment is indeed a stimulant for the economy. And Chris mentioned that this is also a favorite for investors. So I want to bring up a poll, and then we'll continue our Q&A. Maybe poll number 2. First of all. So poll number 2 talks about economic boost. Let's see what the audience thinks. And the question to you in the audience is, how do you feel about the possibility of infrastructure development as an effective policy to boost economic recovery? So that's the question for all of you to answer. And we'll give a couple of minutes for the audience to answer, but in parallel, what I'd like to ask the panelists, and a very interesting question has popped up from one of our participants. With the strain on the country's financials caused by COVID-19, can Malaysia fiscally afford all these planned investments in the northern and southern ISKANDAR corridors? What impact would these have on the country's debt profile? So let me turn over, first of all, in sequence of our presenters. Maybe Datuk Seri Issace, over to you first to answer that question.
Thank you for that question. I think that's a very important question, whether the government can afford to undertake all these projects and programs. But I think what we need to realize is, at this point, what's most important is how do we achieve economic recovery? When we talk about recovery is in our mind, because we are not only talking about lives, but also livelihood. So within this context, all these projects and programs have got this in mind: economic recovery, job creation, entrepreneurship opportunities, supply chain integration. So all these are actually arranged in an integrated manner. So at this point, what is most important is, to get these projects going on the ground and get the multiplier that it is expected to achieve. So when we're talking about the debt and the debt levels, when we're talking about a post-pandemic situation and the economic recovery, I think the debt levels can be managed at a future date. But what's more critical now is rolling out all these infrastructure plans on time so that it will achieve the desired results. Particularly when we talk about this new infrastructure, the digital infrastructure is a key to this whole arrangement. So to answer that question, I think the government is committed, and I think this will be seen in the budget that is going to be presented on this Friday.
Yes, thank you. So invest in infrastructure to boost the economy. That's what you're saying. Datuk Ismail, do you agree with that?
The effort that has to be put in place by the nation is to continue with public investment to ensure that we will continue to build this ecosystem that would allow for wealth to continue to be generated and how those wealth is to be distributed fairly and equitably. Some of this investment coming from the public sector for infrastructure are not really that expensive, I would say, if you can prioritize it and you can spread the cost so that it would not be a burden on taxpayers' money. I believe the people in the government should be able to come up with a good formula and business as well as financial model. But what is more important is that when we talk about funding for infrastructure, I believe very strongly that countries like Malaysia, where we are at the final stages of being a developing country, turning into a developed country, we should involve more from the private sector for investment in infrastructure. Because I believe that if you are able to turn this infrastructure into something that is financially viable, definitely the private sector will come in either on their own or to jointly invest on several of the major infrastructure projects in this country, and definitely so in ISKANDAR, Malaysia. Thank you.
So
Thank you.
Actually, Zainal, maybe if I can just ask Datuk Ismail a follow-up to that. So in terms of the pipeline of projects that are coming both in the northern and the southern corridors, are there certain ones that you feel are good candidates for privatization?
If I may respond to you, Scott, definitely there are lots. But I would like to echo from what you just mentioned. The priorities, I'm not looking from, not from the perspective of Malaysia, but from perspective of ISKANDAR Malaysia, is definitely in these two areas. One is in dealing with climate change, and secondly in transportation, especially public transport. In environment, dealing with climate change, I would like to see more priorities in terms of river cleaning, in terms of flood mitigation, as well as shoreline protection, waterfront protection. And in public transport, it is also very important because we need to have an effective and efficient way of bringing around people, not only goods, but people. Because this, to a certain extent, would be able to, for us, to manage cost of living in manageable proportions. The reason being, if you are able to transfer part of the cost of livelihood towards more affordable public transport, this would definitely help, especially from the low-income population. Thank you.
Datuk Seri Isaac, any quick comments to Scott's question?
Yeah, in terms of opportunities, I think for the northern region, I can immediately count two projects that has got privatization potential. Actually, we are working on this. One is the Northern Corridor Highway, which is actually more than 200 kilometers, right through from Padang Besar right to Changkat Jaring in Taiping, Ipa Perak. So this is a project that is looking at privatization. Then, of course, the other one is actually the Kedah Electropolis. So that is again another significant project that has got opportunities for privatization, and we are open to suggestions on how we can move this.
Thank you. Chris, I want to bring you into the conversation. The question talked about infrastructure and you talked about debt profile, but is it just about debt today, or are there other models that can be considered?
Look, I think when we kind of look at financing infrastructure, we look at it both in terms of debt and equity. I think there are deep pools of capital for both of those sources. But just moving, I guess, to an earlier comment, and I saw some of the comments in the Q&A in terms of, how can private sector or private investors get more invested in infrastructure. I think first, there is kind of no shortage of interest for long-term investors to get invested in the asset class. As I mentioned in my earlier presentation, the key issue for private investors has always been the risk allocation, which is, financial investors are very happy to kind of take on risk around uncertainty, around what the GDP or the inflation would be, what the traffic growth would be, or what the water consumption would be for a concession. Those are things that can be diligenced and be priced in upfront, and they can come in at a relatively low cost of capital to give governments or developers very good value for what they have already effectively de-risked. The challenge for financial investors, especially international financial investors, debt or equity, is that they can't get their heads around regulatory risk or counterparty risk associated with kind of going into a new sector or a new country. And that kind of raises the cost of capital or the barrier for them to come in. So one area where we have seen some success is where governments have done asset recycling programs, where the asset has gotten to a stage where all the risk that's left in the asset is really kind of inflation and traffic, and it makes sense for the government to monetize that, reuse the capital that it has, and then and build in assets which have a higher degree of risk. Investors, for example, won't want to take on land acquisition risk or land development risk, which is really more within the government's control anyway. And in some of the other examples where I showed, for example, where there was the renewable project development in Sweden, I think Malaysia is at that stage where the market is, late developing, moving to developed status. There are actually very sophisticated developers and counterparties which financial investors like ourselves and our clients can partner with those developers and take on some of that risk. So if we were to do a renewable energy project, for example, the developer or the local partner would be able to take on the land acquisition risk, the construction cost risk, construction timing risk, and all that's left for financial investors there is kind of the cost of capital of holding that asset for the longer term. So I think it really comes down to that nuance on trying to find the right allocation for parties so that everybody brings value to the table.
Thank you, Chris. I see a lot of questions being posted up, so I'll try and get through these questions and also appreciate if the panel can help me to be brief so that we can run through all these questions. Results of poll number 2. Let's have a quick look to see what the audience think in terms of infrastructure investment. Do they agree with us? So this is very interesting, neck to neck. 50% agree, 45% somewhat agree, only 3% disagree. So agree and somewhat agree. So gentlemen, we are on topic actually. If they all didn't agree, then this will be a very tricky session, but I think in general the agreement is there. I'd like to bring up poll number 1 on the priorities, because a lot of questions that I see talks about priority. Is it rail? Is it airports? Which infrastructure? So question to the audience: what should be Malaysia's infrastructure spending priorities be over the next 5 to 10 years? So you may choose more than one. And I believe this question would have covered quite a number of the questions also. Moving on, whilst the audience answers that question, I want to talk to the panelists about the infrastructure that has already been invested so far and the ROI, because we're talking about infrastructure to stimulate the economy. But the existing infrastructure that has already been invested in the various models and the ROI, are you happy with the ROI? What are the lessons learned? What could have been done better in terms of design, the planning, the rollout, the implementation, the funding models? So what do you think could have been done better? I'll keep to the same order, if you don't mind. So Datuk Seri Issace, over to you first.
Thank you, Datuk Zainal. I think in Malaysia, I think the North-South Expressway is a classic example of a successful public-private partnership project. And it has had very significant impact on the economy, right through from Johor Bahru, right up to Bukit Kayu Hitam. Imagine Malaysia without the North-South Expressway. You know, so that is a classic example of a very successful privatization project that has, has got a significant impact. The other one is, you look at our ports, for example, the Penang port, the Kuantan port, and in Johor, the Tanjung Pelepas. All these ports have been privatized. And you can see that, they are all doing well and they are contributing to national economic growth. So at least it has taken the strain from the public sector in terms of investments. Of course, the government has provided support in terms of facilitation and incentives, but the bulk of the capital came from the private sector. So the private sector for infrastructure development is the key. So probably we should be looking at ratios on, to what extent government should come in and to what extent private sector can come in. In my mind, and from my experience, at least 70 to 80% of these privatization cost components, if the private sector can put in, then the remaining 10 to 20% then can come through government support mechanisms.
Right. Excellent examples, Datuk Seri Issace. Datuk Ismail.
Yeah, thank you. I think whilst Datuk Issace gave examples of the ones that are already in place, I would like to share for ISKANDAR Malaysia, one of our major effort that we are putting in now is the build and the construction of the bus rapid transit, which is going to be a game changer for ISKANDAR Malaysia in terms of how we deal with public transport in this particular region. Now, this BRT will involve a web of about 1,500 kilometers that includes the feeder system as well as the trunk system as well as the direct routes. Now, based on our latest calculation, it will cost us around 3 billion ringgit. But in the first instance, the government have decided that the government will have this risk to be shared with the private sector. Hence, the government allocation falls to only about 1/3 of the allocation, which is about 1 billion ringgit for purposes of building up the infrastructure, whilst the mobility, the rolling stock, and the operation will come from the private sector. And we also bring in terms of how many years will it take for this particular investment to break even. And we have calculated along the lines of about between 5 to 6 years before this investment will break even and into profit. Now, what this tells us is that Malaysia has long years of experience in dealing with the involvement of infrastructure projects that involve both the private sector and the public sector. And the BRT is one such example which the government is banking upon. But what really is important here is that we can say that there are two types of investment when it involves PPP. One is where you can rest assured that you will have within this ROI a time where we are able to break even and into profit. That, in my view, should not be a problem. But the other one is where the risk factor is high, where there is reluctance on the part of the private sector wanting to invest in this sort of infrastructure because they're not sure whether they are going to break even, and they do not want to be prolonged with this type of thing. So in those circumstances, when government wants to bring in private sector, there must be other components that should be factored into this investment. For instance, if you are building, say, a rail system that would definitely not able to break even in terms of the return for investment, you need to bring in other components of that investment. For instance, you need to put in other assets like land to allow for this land to build around those rail corridors in order for this development of this land to bring its own return and to be factored into the overall summation of how the investment and those returns. So these are approaches and methodology which should be incorporated and as Malaysia continue to progress and to further involve the private sector when we deal with such investment. Thank you.
Thank you, Dr. Ismail. Chris.
Yeah, I'll just follow on, I think, from the comments from Datuk Seri Issace and Dr. Ismail, which is, you know, an infrastructure project isn't bad if it doesn't make a positive financial return, because there could be many positive externalities that don't factor into the ROI. Doesn't mean that the government shouldn't go ahead and do it. I think where the interaction with the private sector is really comes back down to that risk allocation and talking to the example of a rail project, for example. You know, private sector can take on the risk of managing the EPC contractor, but the private sector will be very reluctant to manage the risk of land acquisition, which should be something that the government procures and takes the risk on. Where the project is challenged from an economic viability point of view, then perhaps, you know, there could be, earlier there was a suggestion that maybe land could be attached to it, but what usually comes with a rail concession is the rights to do marketing along the stretch, or some have retail concessions with the rail operations, which adds to some commercial revenues associated with it as well. Or the concession could be structured in such a way where the recovery period or concession is longer, so that the private sector can make that capital back. And I think, you know, if all of these risks are clearly identified, delineated, and the right party takes on the risk, then what is left from the private sector would have strong interest and be priced the right way to give the government the right kind of value as well.
Right. Scott, a quick 30-second answer from you, but as you answer that question about ROI, can you also comment on environmentally friendly and sustainable infrastructure? You talked about carbon footprint. Have you seen enough of these kind of initiatives in infrastructures in Malaysia and in the region?
Well, two thoughts actually. So one on, you asked about what could have been done better, and I think just having, you know, being heavily involved in the economic transformation program for Malaysia and a lot of the different infrastructure that came out of that, I think the connectivity between, there was lots of great projects that were done. The connectivity between those projects is probably the next evolution about how to better connect. So even like the bus rapid transit system of be coming up, how does that then connect to the RTS, which then connects into you know, another transport network as an example. So I think that's something that over the next 5 years, there's a lot of opportunities to take all the great work that has been done and better connect. On the second one, just on related to the sustainability side, you know, it was mentioned earlier about the digital economy and the importance of digital economy. You know, with that comes the requirements for data, the processing of data, all the data center components to that. one of the things that, you know, always is a bit of a barrier coming into Malaysia is the power grid, just the, you know, the single ownership of a lot of the power network, which in building redundancy is often difficult for some of the larger client base that may be interested in investing into the digital economy and expanding rapidly. So I think that's something that, you know, how that energy grid is provided in terms of a carbon neutral or decarbon strategy might help in terms of also then attracting larger groups in terms of how they might expand to support the expansion of digital.
Right. Thank you, Scott. Can we see the results of poll 2, please? So this is interesting. 68% have said rail. That's the top. 67% digital. So Datuk Seri Issace and Datuk Ismail, you mentioned digital. So this is absolutely correct. And then 56% on water, 55% on education. So this is a very interesting profile. But rail seems to be top. We have time for a last question. If I can just take 1 minute, and if I can ask for a quick 15-second answer from each panelist. There are a lot of local as well as international participants in this webinar today. What is your message to them, please? Datuk Seri Issace.
I think the economic recovery is urgent, and there is a significant impact. Infrastructure can contribute to the economic recovery.
Great. Datuk Ismail.
I strongly believe that the success of the way in which we handle the situation is a collaborative effort, not only within nations, within private and public sectors, as well as the community, but between nations. Because this is a global thing, and everyone needs to put their minds and brains together so that we have a common objective in resolving this matter. Thank you.
Thank you. Chris.
Look, the opportunity to invest in infrastructure is vast, and based on the presentations by my esteemed panelists, you know, there hasn't been a better time to now look at investing in Malaysia infrastructure.
Thank you. Scott.
Make sure that the investment is doing more than just a single investment. So example, investing in the road, the Northern Corridor Highway, for example, make sure it also acts as a flood barrier. It functions for long-term climate risk, and it can drive other livable outcomes.
Thank you. Well, unfortunately, we've run out of time. We've come to the end of this webinar. I'd like to thank all the participants on this call. I'd like to thank the panelists, Datuk Seri Issace, Datuk Ismail, Christopher, Scott, for your wonderful insights. This is the first in a series of webinars in Malaysia. I see a lot of questions here, many questions on East Malaysia, for example, other questions which we couldn't answer. We'll have a second one pretty soon. So thank you everyone today. I've enjoyed the conversation on how we can make our cities more resilient and deliver better infrastructure for all. On behalf of AECOM, thank you everyone for participating. Please keep in touch with us. The PowerPoint slides will be made available to you. Keep in touch with us, and most of all, keep safe. Terima kasih. Thank you. Goodbye for now.
Throughout our history, AECOM has been committed to delivering a better world. As the community grapples with the challenge of coronavirus, our forthcoming Future of Infrastructure report is a call to action. The time to start rebuilding is now. By creating jobs and economic activity, investment in infrastructure can help lessen immediate hardships and create opportunities for a stronger tomorrow. Thriving societies, a healthy planet, a culture where innovation thrives, resilient communities that are sustainable, funded according to need. That future is possible. That future starts now.